First is introduction. The commodity sector is one of the main contributors to economic growth. After Indonesia, Malaysia exports the second largest quantity and value amount of goods containing palm oil. So, in our report, it's about the financial performance of 3 public companies in Malaysia in the plantation industry to make a comparison covering a cross-section of analysis. Among the 3 public companies in Malaysia that we have chosen are FGB Holdings Berhad, Genting Plantations, and Sandarbi Plantations. We chose these 3 companies because all these 3 companies are well-known plantation companies in Malaysia and have a proper financial statement. Next is company profile. First, FGB Holdings Berhad's ventures are plantation, sugar, and logistics. Upstream, downstream, research and development, marketing, trade, and the value chain for renewable energy are all parts of the plantation business for this company. Second, Genting Plantation Berhad is the company works in plantations and offers its subsidiary management services. Plantation, property development, real estate investment, research and development, and downstream manufacturing activities are some of the subsidiaries' main businesses. Third, Sandarbi Plantation Berhad is active in every phase of the palm oil value chain, including upstream, downstream, renewable energy, and agribusiness business, as well as research and development. The company also works in coconut crushing, sugarcane, and rubber plantations, as well as the beef cattle industry. Now, I will hand over to Hafiz to continue the presentation.
Thank you, Syakirah. Now I will present to you a statement of cash flow that consists of 3 plantation companies ended 2021. As you can see from the chart, the highest total cash flow is SIMW Berhad, which is 667 million. Next, the second highest total net cash flow is Genting Plantation Berhad, worth 686.7 million, while the lowest one is FGB Holding Berhad, worth 301.73 million. Now, we will see one by one of the company. For the first one is SIMW Berhad. This company managed its business well because the company generated a cash surplus of operation activities. The positive cash in operation activities contributed by the positive figure as stated at the table. Now, we will focus on the investing activities. The net income is positive, where the major contributor to the positive figure is other investing cash flow items. There is also a negative item in these activities, which is capital expenditure. The capital expenditure was in a negative figure because the company does not buy any new PPE and there is not enough return on investment based on insufficient PPE. We will move on to financing activities, where the net income from those activities amounted to a negative figure. It is due to all the negative amount of financing items that stated on the table. Next, Genting Plantation Berhad. The company also managed to obtain a positive net cash flow, but the contributions of this company operating activities is not as big as the previous company that I have presented before. Besides that, net cash in investing activities also contribute to the positive cash flow of this company. In operational activities, the main contributor to the positive figure is depreciation and cash tax paid, while for investing activities, the main contributor to the positive figure is the other investment cash flow items. In the investing activities, there are also negative figure, which is capital expenditure. It is due to the company has held certain PPE in UK business to be sold and pledged as collateral for the group GBP loan. The last company is FGB Holding Berhad. This company also managed to obtain a positive net cash flow, but it is the lowest among the others too. Despite the remaining deficit in financing and investing activities, the company is still able to cover both activities by using cash from their operating activities. The biggest contributors to the positive amount of operational activities is depreciations and non-cash item. Next, let's look at the investment activities. The net income contributed by the investment activities is a deficit figure. It is due to a negative figure of capital expenditure. Capital expenditure is a negative number because there are prolonged delay in rebuilding bridge that collapsed during the COVID-19 pandemic, and higher costs related to rehabilitation work has caused a drop in the value of the carry plant. Lastly, this company financing activity is a negative amount due to a negative figure of insurance of debt. Now I will pass to Arif.
Thank you, Hafiz. Now we will discuss about the market ratio. There are 3 market ratios involved in this analysis, which are earning per share, price to earning ratios, and dividend yield. Firstly, I will talk about earning per share. FGV Holding Berhad has the earning per share of RM31 per share, followed with Genting Plantation Berhad at RM51 per share, and lastly with Dabi Plantation Berhad at RM33 per share. Genting Plantation Berhad has the highest figure for the earning per share compared to the other two, and this means Genting Plantation Berhad is in a higher profitable state and able to distribute much more profit to the shareholder. Oppositely, FGV Holding Berhad has the lowest earning per share in the list, making the company to be seen as less profitable and not able to distribute much profit to the shareholder. Secondly, I will focus about price to earning ratio. FGV Holdings Berhad has the price to earning ratio of RM4.60, followed with Genting Plantation Berhad with RM12.62, and lastly Dabi Plantation Berhad with RM13.28. Clearly, we can see that Dabi Plantation has the highest figure compared to the other two. This means the company has high stock price relative to earnings. Based on investor style of trading, they could find this overvalued by benchmarking other company. In contrast, FGV Holding Berhad has the lowest figure of the price to earning ratio. We can assume that the company has a very low stock price relative to the earning, and additionally some of the investor might think the company is undervalued based on certain benchmarking. Lastly, I will discuss about dividend yield. Dividend yield for FGV Holding Berhad is RM6.11, followed with Genting Plantation Berhad with RM2.97, and lastly with Dabi Plantation Berhad with RM5.14. FGV Holding Berhad has the highest dividend yield. This can be assumed that the company distribute the highest amount of dividend to the shareholder or stakeholders. On the contrary, Genting Plantation Berhad has the lowest dividend yield among others, and can be said that the company delivered the lowest dividend to the shareholder or stakeholders. Now I will pass to Anis Diana to explain on ROE DuPont.
Thank you, Muhammad Arif. Now I'll proceed to ROE DuPont analysis for Plantations company that ended 2021. The highest return on equity is Genting Plantations Berhad, which is 24.56% compared to FGV Holdings Berhad and Dabi Plantation Berhad, which are 12.14% and 7.18% respectively. A company that generates income effectively from its shareholders' equity has a higher ROE. A low ROE, on the other hand, indicates that the company earns comparatively little when compared to the equity of its shareholders. According to the DuPont formula, financial leverage and total asset turnover increase as ROE increases. Simply, Wall ST claims that Genting Plantation Berhad's ROE is not very noteworthy. We won't fully discount the company either because its ROE is comparable to the industry average of 11%. The net income of Genting Plantation Berhad increased at a rate of 58.85%, which is still a respectable rate of growth. Given that the ROE is high, we believe that there may be more variables at play that could be affecting the company's growth. In addition, the higher ROE of Genting Plantation Berhad shows that the company has been paying dividend for at least 10 years or more. Moreover, this shows that the company is committed to sharing profit with its shareholders. The group expects palm oil price for the remaining part of the year to remain resilient, supported by a confluence of factors such as sustained demand on the back of a global economic recovery, tightness in supply ahead of the upcoming monsoon season, as well as historically high prices of other substitute oils and fats. That's all from me. Now I will pass to ZARITH KARMILA for further discussion and recommendation.
Thank you, Anis Diana. Now I will present the discussion. Based on financial analysis, the cash flow of Dabi Plantation Berhad indicates the highest total cash flow as compared to Genting Plantations Berhad and FGV Holdings Berhad. It was proven by a positive amount of cash from the operation, which amounted to 2.7 billion ringgit. Depreciation and cash taxes paid out to positive significant contributions to operating activities. Next, we will see this company's market ratios. Based on the calculated market ratios such as price to earning ratio, Dabi Berhad has the highest figure of price to earnings ratio which amount 30 ringgit 28 sen compared to the other two companies. This means that the company has a high stock price relative to earnings. Now we will move on to ROE DuPont. Sandabi Plantation Berhad has a high net profit margin, which is the company good in converting sales into actual profit. Therefore, some recommendation for Sandabi Plantations Berhad that we can give to improve their performance in the future is that in terms of cash flow, is since the company is high in debt, meaning the company is in a risky financial position, the company should reduce the usage and the requirements of needing to apply on debt while pay off available debt to lower the leverage of the company, thus make the company less risky. Other than that, for market ratio, the low earning per share can be fixed by reducing its share count through share buyback. This way, the company can reduce their capital usage by cancelling the repurchased stock. Lastly, for the ROE DuPont, Sandabi Plantation Berhad can increase their total asset turnover by selling unused assets. So the proceeds from selling the unused asset can be used to improve the company's efficiency in sale by purchasing new and useful assets. That is all from me. Thank you. Now I will pass to Syakirah to conclude this presentation.
In conclusion, after doing a financial analysis such as cash flow, market ratios, and ROE DuPont, we found that Sandabi Plantation Berhad has the best performance compared to Genting Plantation Berhad and FGV Holdings Berhad. Each company must have their own advantages and disadvantages. Just like Sandabi, their company has weaknesses, but it does not affect their performance badly because the advantages they have can cover the weaknesses. Sandabi Plantation Berhad needs to make a long-term strategy so that their company will remain relevant and can face the increasingly challenging economic situation.